There we go.
I can become a YouTube star. Actually, Lisa will be our YouTube star for this first one.
Well, you guys are going to be on YouTube after I post this, so it could go viral. Never know.
Well, perfect. I'm going to go ahead and get started if that's okay with everybody and people can join us. So today is our first program of 3, and welcome everybody for joining us. We're from Bailey Properties, and let me introduce ourselves and our team from Premier first. We have myself, and I'm Rick Dana, my daughter, who is Alicia Dana, Jeff Warwick, who's with us today, and Denise Brazil. All 4 of us had done the Strawberry Festival, and many of you signed up for the program during that. And again, tonight, these are 30-minute programs, so we're going to try and give you a lot of information while you're sitting at home, even having an adult beverage, or maybe you're just taking a break from the exciting Republican debate to spend a few minutes with us. Either way, we're going to give you a lot, and we're going to give it to you pretty quick. After we're done, you're welcome to ask any questions, individual questions, questions about anything you have heard tonight. And hopefully Lisa will have some time to stay with us a bit and answer those questions. I will go ahead and turn it over to Lisa. Lisa Cardoza is not just a loan officer. We have someone special with us tonight. Lisa is someone who has done this for many, many years, and she's done it well. And she has all of the programs, ideas, and things that she's going to share with us tonight in order for you to learn what is the first step to buying a home. And the first step is meeting a lender. And we'll do that tonight. We'll talk about it. And then number 2, we'll go into how you actually buy a home. And number 3, we'll go into how you close the escrow. By the time we're done, you'll be the expert at your next barbecue. You'll be able to teach other people how to buy a home. Are you ready, Lisa?
I am.
Well, take it away.
Thanks, Rick, for the introduction, and welcome everyone. As Rick mentioned, we had a booth out at the Strawberry Festival, and we were promoting this program to help people understand the ins and outs of buying a home. And being a first-time home buyer can be pretty scary, but we're here to show you that it's actually very simple, and it's and we're here to guide you through that process. And so with that said, I'm going to kind of share different aspects of a loan officer and aspects of lending, so you can understand what a loan officer does. So I'm going to jump right into that with what is a loan officer. So we kind of wear a lot of hats, but basically what we do is we analyze the documentation that you provide us, which will be shown to you in a different screen. And we just advise you on how to handle your credit, how to handle, getting funds for your down payment and closing costs, kind of just bundle all that together and advise you to what you can qualify for. So we do pull a credit report, and we look at your debts, and we can determine if you need to pay some of those debts off. That sometimes needs to be done to qualify. We can also consult you on your credit score and help you, which can optimize your buying power, because credit scores now are very important. It does determine your interest rate, and it does determine your ability to purchase. So we analyze that. We also sometimes will look at your credit and allow you to and give you advice on how to handle that credit. We're specialized in many different loan programs. And so, and there's different loan programs for different needs. So as a loan officer, our function is to analyze your situation and meet you up with the program that works. We provide the dollar amount of what you're going to need to purchase a home. So that's going to be, again, we're going to talk about some of the terminology in a little bit, but that's your down payment and closing costs. So the amount of cash you're going to need to make a home purchase. And then we share with you what your mortgage payment is going to look like. And normally the mortgage payment includes your property taxes and the homeowner's insurance, which is the fire insurance that you have to have in place in case the home burns down. And then we also kind of help you guide you to some maybe sources for funds for down payment and closing costs. That sometimes that's kind of the biggest hurdle is coming up with the cash to purchase. But there's lots of grant programs, city grant programs, there's state grant programs. Sometimes, people aren't aware that they can actually borrow from their 401k, gifts from family members, or we can even put you, on like a little savings plan, like this is how much you have to save per month to get to that home ownership piece. So that's kind of what we do. We're kind of just orchestrate your situation and make that fit for and it's all about your comfort level. So it's what you can do and what you're comfortable with. So with that said, I'm going to just jump to the, where is this? Sorry. This is the documentation needed. And this list is very compact because it's the basics. If you're work for a company, you're a W-2 wage earner, we're going to ask for pay stubs. We're going to ask for W-2s. We do require evidence that you have your funds to close. So we ask for your bank statements to cover 2 months, and we actually analyze those bank statements, and we look at deposits and other things that could be red flags. As an example, if you have $10,000 in cash and you dump it into your bank account, that's not seasoned funds, so we wouldn't be able to use those funds. So that's why it's important that we look at all of this ahead of time and understand what your deposits are all about, so we can make sure that you have the adequate information that's allowable by guidelines with respects to cash, because they are pretty picky about that stuff. And then photo ID. So this is really a simple little list. And I think that's the big challenge is people think you have to bring all kinds of documentation. And this is just the beginning. Now, if you're self-employed or you get Social Security or you're on a pension or some other types of income, then we're going to, once we have our initial interview, then we would say, okay, now we need to bring this additional documentation. So this just gets us started. Doesn't mean it's the only thing you need, but this is how we start the process. Okay. Oops, I did that one, huh? Sorry. All right. So I think the most challenging thing for borrowers, and when you're in this industry with like a loan officer or your realtors, we use a lot of lingo that we think that everyone should know. And so I just try to, these are probably the language that's used most around loans. So I'm sure everybody knows what a credit report is. A credit report provides your scores and it lists all your debts, auto loans, credit card loans, student loans. The credit report doesn't have your other responsibilities like PG&E or insurance and all of those things. We don't take those debts into consideration. We only take into consideration the debts that appear on a credit report. And then that credit report, they offer credit scores. And the credit score is basically how the 3 credit reporting agencies grade your credit report. And those are also known as FICO scores. And just a note, there's a lot of sources that provide consumer credit reports. You have your credit card people that are saying, this is, we can offer you a credit score. You can sign up for something called Credit Karma. So those credit scores are considered consumer credit scores, and they're much different than mortgage credit scores. Mortgage credit scores are actually lower, and we get 3, so we can take the middle score. We throw out the high and the low, and we use the middle score, and that's an industry guideline. So when you see your Credit Karma, or your other type of consumer report, you have to be that's not going to be what the lender uses. And so some people think that they can buy because they have a 700 credit score, but when we get their mortgage credit report, it could be 600. It can be a big difference. So a mortgage credit report is extremely important in the process. And then you always hear the word down payment. What does down payment mean? So I kind of did a little example here. If you have a sale, if you're looking at a loan program with 3.5%, 3% down, and your sales price is 500,000, the down payment is 15%. So that's the difference between your sales price and your loan amount. And majority of loans require a down payment. So that when we're talking about down payment, that's the lump sum between your sales price and your loan amount. The other part of the cash investment is closing costs. And closing costs are fees from third parties that these third parties are needed to close the transaction. They could be the appraiser, the title and escrow fees, the county recording fees. You have to get insurance for the home. We have to set up accounts for the property taxes and insurance payments. So those are all lumped together as closing costs. So the two things that you need for a purchase is normally a down payment and then the closing costs that are associated with the transaction. And again, that's what, as a loan officer, that's what we provide you. We provide you the sales price, the down payment, and the closing costs, and then you understand the whole cash investment. An appraisal, that is a requirement, most usually with a mortgage, and that's an individual that's licensed to go out to the property and analyze the data for sales in that area to see if the sales price that you selected or that you're in contract for actually is supported by other sales in the area. So if you're buying a house for 500,000 and they has to be data out there that supports that $500,000 sales price. And they're looking for comparable things, comparable bedroom count, comparable bath count, square footage, lot size, neighborhood location. All those things are taken into consideration on an appraisal. So it's an in-depth report about the property and other sales in the area. And that's how, and then they determine with all that information that what the appraised value is. And the goal is always have the appraised value is the same as the sales price. The appraiser has a copy of the contract, so the appraiser knows what the sales price is, and that's his or her goal is to get that value to the sales price. Lastly, escrow company, that's a third neutral party that controls the transaction, basically. That's where we get reports from the title company or escrow company with respects to the title of the property. Is the seller the actual owner? They make sure there's not any liens on the property like back taxes or mechanics liens. They determine if there's solar on the property, is there a lien for solar? So that report comes from the escrow company. But the escrow company takes your money for not only your for your down payment and closing costs, then they take the lender's money that funds your loan, and then they distribute and close the transaction. So they're responsible for recording our documents at the county, and that's when they do that. That's the close of escrow. That's terminology used a lot, but escrow has a pretty big function. So they're dealing with everybody that's a part of the transaction, and they don't make any decisions. They just take direction. And so that, again, a third neutral party. Very important people in the process. Okay. So one of the things you hear a lot about is the pre-approval process. And if you're out looking at homes, and if you've done that and a realtor's ask you, have you been pre-approved? That is a crucial step, not only for you, but for your realtor. First of all, it allows you to understand what your purchasing power is, how much money you need, what your payments are going to look like. But what is the pre-approval process actually? How does that all come together? So I showed you the list of documentation that needed to be provided. So the loan officer collects all the documentation from you based on your situation and the program that you're looking for. We obtain a credit report. We can use ITIN numbers, which is really exciting, and obviously Social Security numbers. So we need those to request a credit report. And the loan officer takes your data and your documentation and the credit report, and then we evaluate your income and your debts and your credit score and the funds that you have to close. So we analyze all that and give you the direction. Again, we're going to go with this loan program after we discuss your wants and needs. That information is all submitted to an underwriter, and an underwriter is basically I'm not going to call it licensed, but they are educated in underwriting or approving loans based on each program has different scenarios, different requirements, different guidelines. And so the underwriter is the one that goes through and analyzes all of this documentation that you and the loan officer have put together. And once they do that and they've analyzed all that, the underwriter issues the pre-approval. And that pre-approval could, and most likely does, have a list of other conditions. We gave them the minimums, and then they might come back and ask for more, and those are called loan conditions. So that's the underwriter's function, is to be sure that all the documentation in the file meets the guidelines. So once you have done all of this and we have your underwriter pre-approval, now you're ready to, your loan's approved and you're ready to start shopping for a home. And why that's so important to take this step is you know exactly what you can afford and what you can be looking at. Your realtor knows, and so neither one of you are wasting time out there looking at properties that you may not qualify for. But even more importantly is that the contract for buying a home for the state of California actually has a section that clarifies where's the borrower in the process. Are they pre-qualified? Are they pre-approved? Or are they fully underwritten pre-approved? And the steps I just went through here you're fully underwritten, which means you aren't having to worry about them going into contract and then someone tells you, oh, sorry, you can't get your loan, because that's obviously heartbreaking. So you have a fully underwritten pre-approval, and all we're looking for is the appraisal and the documentation from escrow, which I just talked about what those two are in the previous screen. So you've taken all these steps to get this pre-approval. And normally a pre-approval, once we have the full package and we submit it to underwriting, it's 48 hours and you are ready to start shopping, start bugging your realtor to go show you homes. Okay. All right. So with all this data that we collect, your income, your debts, your credit, your cash investment, then we can look at what kind of loan programs are available to you. And there are many, many, many different loan programs. It's too many to even list or even talk about. But what we're providing here tonight are some of the programs that are really good first-time homebuyer programs. And the reason normally is either the cash investment smaller, or you can tie them together with assistance programs, or some of them don't even have down payments if you qualify for those. So these are kind of the popular programs. First one, as you see, there's the Watsonville program, and they have a first-time home buyer and a down payment assistance program. There's two separate programs, but they have those. Measure O is in the city of Santa Cruz, and that's a affordable housing program. And then in the county of Santa Cruz, so nothing that in the city, the county of Santa Cruz has a Measure J program. Measure J can also be used in Watsonville if it's different than the Watsonville. If it's not a affordable Watsonville program, it can be a Measure J program. So that's all of the county, anything not in the city limits. And again, that's affordable home product as well. CalHFA is a state program, and they offer funds for closing costs. They'll give up to 2% of the sales price towards your closing costs. So that's a pretty exciting program. And along with that program, they come up with, once in a while, California comes up with some other programs. The one that's on the table right now is they're giving you 25% of the sales price towards the down payment. So that's pretty exciting. We're waiting for it to be approved. VA and USDA, I like to talk about these because they're very good programs, obviously veterans, and have that no down payment option, but so does USDA. And USDA is really a rural loan program. It's not in the city limits normally. You're going to be in Aromas or San Lorenzo Valley or somewhere not in city limits, but again, it's no down payment. So it's a great program. Home Ready and Home Possible, those are Fannie Mae and Freddie Mac programs. And Fannie Mae and Freddie Mac are the entities that create the guidelines for all lenders. So they also have some first-time home buyer programs that bring in lower down payment. They also offer a little bit lower mortgage insurance, which I'm not going to get too much into that, but they just they're again helping home ownership by getting programs that will have a lower down payment. And then FHA is a 3.5% down program. FHA is very lenient, more lenient than Fannie Mae and Freddie Mac. The credit scores can be lower. Your debt ratio can be higher. It's a more forgiving loan. So it's a very, very popular loan as well. So these again are just a snippet of some of the programs that are out there, and there's always programs being added. So again, when you sit down with the loan officer and we lay out your scenarios, our job is to guide you. Either it's these programs or something else that might be available, but these are the most popular for first-time home buyers. And I think that is all I have to talk about tonight. So I'm going to turn it back over to Rick.
Well, can I interject real quick, if you don't mind?
Of
I was going
course.
to mention regarding the loan programs. I have a personal experience with dealing with the affordable housing program of Santa Cruz County, and it's particularly Measure J because about 2 years ago, my wife and I had been renting in Aptos, a small little beach cottage, and we were raised our 2 kids there, lived there 16 years, pretty low rent for most of the time we were there. And then one day, 2 years ago, the owner decided we're going to sell, and they gave us a 16-day notice, and we were like, holy cow, what do we do? Fortunately, I was a realtor and I was familiar with navigating some of this. So immediately we went to get approved with the lender. We started talking to a lender. We didn't have huge income. We were under $100,000 a year as a family, and we got qualified pretty quickly for a mobile home loan. And that's where we started. So we started doing the mobile home loan. We were looking at mobile homes, higher interest rates, but then a Measure J property presented itself to us that was on the market. And I thought, holy cow, this would be incredible. So we switched gears. We went to back to our lender. We said, look, we'd love to get qualified for this Measure J property. Can you help us? Interest rates are much better on single family homes than they are on mobile homes. So we thought this would be great if we could qualify for a high interest mobile home loan, or not high, but higher, then maybe we could qualify for a affordable housing loan. And we did. We got qualified. They accepted our offer, and we were able to purchase a 3-bedroom, 2-bath, 1,400 square foot home in Green Valley in Watsonville. So worked out for us. That was great. If anyone has questions on how to navigate, I kind of consider myself, having gone through that process, I kind of consider myself more of an expert in affordable housing programs. So if anyone has questions on that, I'd love to help answer those questions, or just help them navigate all that, as will Lisa and Vince, our other lender, and really any of the realtors here in the group. So yeah, that's my story. Just wanted to share that real quick.
Thanks, Jeff. The other thing I forgot to mention is Vince, who couldn't make it tonight. He is Spanish speaking as well. So if you need this presentation, you would like to do this presentation again, and with Vince's guidance, he's happy to do that. So just let us know and we can set up a meeting with Vince.
Perfect. Thank you, Lisa. And again, as she mentioned, thank you for doing double duty. I know it's not always easy to spend 20 minutes having to explain stuff with no break. So thank you. And Jeff, thank you very much for the personal story. That was fantastic. And I think it opens our eyes. Everybody in some form or way, there are so many different ways to afford a home. And I know a lot of people, their first thought is, I can't afford a home. Well, you just don't know that without getting the free information, the programs that are available. The government does want you to own a home, and that's why they do these different programs to encourage people to have the opportunity. So, and thank you very much again for the in-depthness of it. When you come to see us at an open house or meet us, the first thing we're going to do is bring you to someone just like Lisa and Vince, because number one, we need to know what direction to go, and number two, we need to know what you're comfortable with, and we also need to know what the bank's comfortable with. So hopefully this was helpful tonight. We're going to get you out of 7:30 so you can go on with the rest of your evening. We will meet 1 week from tonight, and it'll be the four of us, myself, Jeff, Denise, and my daughter, Alicia, going over the process of actually how we go look at homes, how agents cooperate with each other, how offers are written, accepted. And then the third session, a week after that, we'll talk about after that offer is accepted. So hope you enjoyed today. Hope you enjoyed it. If you do have any questions for Lisa, please feel free to use the chat room, open up your mic. We'll stay for a couple extra minutes for any of those.
Yeah, there were some questions in the chat, Lisa. We had questions about gift funds from a parent or from someone that's not a parent, a close friend. So you might have seen some of those, and I don't know if you want to elaborate on some of the answers that we were giving while you were talking, or if anyone wants to open their mic, like Rick said, and just ask a question personally, feel free to do that.
You want me to address the gift question?
Please.
Okay, so it is all the loan programs that that were listed on the potential loan programs. They all allow for gifts, and the only one that requires that it's a family member is FHA. The other ones, they, even if it's a close friend, they will allow gifts, and that gift amount can be any amount. It could be all of the money. It could be all the down payment and all the closing costs. You don't need your own dime if your donor is willing to give you all the funds to purchase. So yes, gift funds are absolutely allowed.
Now, what about with some of the other programs, Lisa? How does, I know each program is different and there's so many programs, but obviously gift funds will vary depending on some of those programs, right?
The only program that, and this is jumping way out of, but the only loan programs that require that you have your own funds are jumbo loans. They require you to have 5% of your own funds. All the other conventional VA, FHA, they all allow 100% gift.
Now, I know on Measure J.
Oh wait, but Measure J doesn't. You have to have 50% of your
Right.
own down payment. Yeah.
Right. Okay.
Any other questions?
We have one. What about a co-signer with these loan programs?
That's a really good question. So the affordable programs, the Watsonville program, Measure J and Measure O, do not allow for co-signers. FHA, absolutely. The home ready program, so one of the programs with conventional loans will allow for co-signers. All conventional loans, you can have co-signers. VA doesn't allow for a co-signer. VA can be your spouse, can be on the loan with you, but to get a co-signer, it doesn't really work because the veteran still has to qualify on their own. So the whole idea of a co-signer is to help with help qualify financially with their, we just bundle your income, their debts, your debts. And if the numbers work, that's how the co-signing works. But again, VA doesn't allow it, and neither does any of the affordable programs.
About what? Oh, the wife's debt.
We had another question. Someone was asking how many programs can be used at the same time or combined?
That's a super good question. So the only ones that you can combine is the CalHAFA program. So CalHAFA has some assistance programs. So you're getting your mortgage, and then the CalHAFA is giving you the funds for down payment. Same, they do it with FHA too, but they're not doing it with FHA right now. So we can't combine, like the loan programs that I showed you there are all isolated. So you wouldn't combine a VA loan and a conventional loan. Right. So it's just, those are solid different programs. But if you're using, let's say, the Watsonville first time home buyers program, and they're giving you funds, those can be coupled with, you're getting your loan, and then you're getting assistance funds from the city of Watsonville. And again, also the state of California is coming up with one of those as well. So you're getting a traditional loan, and then there's those entities that are giving you grants for a down payment. So that's when you can couple things.
We had
Yeah.
one question.
Okay.
So if we have one spouse that has debt, and maybe the other one doesn't, I'm assuming, what would their situation be, and what would their opportunity be? Because
So if you're married, and let's say a spouse has a lot of debt and low credit scores, let's just do both of those. And if the other spouse can qualify on their own, we don't have to use the spouse's credit or debt, but we also can't use their income. So if their debt or credit doesn't meet guidelines, we can't use their income either. So you can buy as just one spouse. The only loan you can't do that with is FHA. We're a community property state. So we are going to, if the spouse isn't on the loan, we want to pull the spouse's credit report. We're not going to look at the credit score because the spouse isn't going to be on the loan, but we're all going to but we have to include both spouses' debts. So FHA is a little funky with that.
but if you did, one spouse did it on their own, you could always add the second spouse to the title as the owner of the home, just not necessarily be put on the loan. So they'd have
Absolutely.
yeah. So you could still
Absolutely.
keep the loan, but you would have to add the spouse with the debt after the fact.
Yeah.
Good, great. Well,
Yeah.
great questions. Wow.
Yeah, they are.
Really good.
Any last questions before we sign you off at 7:32? Yes, we have. Okay, here's the same question essentially. So we may have one spouse. Also, I may add for everyone asking questions too, Vince and Lisa are really able to take a look at your situation sometimes, and you'd be surprised on some of the situations that they can improve your credit score simply by doing a little work for you and a little bit of checking here and there. So that's always a possibility too. But her question was, if you do have a spouse with low credit, you're pretty much back to the question before. Would that be accurate? Do you take the higher credit score between the spouse? So let's say one has a 720 and one has a 580. Will you use the 720 or do we use the 580?
Okay, that's a great question. I'm going to elaborate a little bit. So they use the lowest middle score in the package. So like I said, you have 3 scores and they're going to use the lowest one. So in that situation, we'd use the 580. However, on a conventional loan, if you have at least 5% down, we will blend the credit scores. So we add those two together and we take the average. And then that's the credit score that we use. But that's only with conventional loans with 5% down.
Interesting. Fantastic. Perfect.
Yeah.
So it's a lot of information. Yeah, it's really important to talk to a lender early in the process, just to pick their brains and find out what you need to do, or what programs you're eligible for, and what how much of a house you can afford, especially. So yeah, really cool, really good stuff.
Yeah, thank you.
Lisa and Vince. And the best part about all of it is all of this information is free. So you can always make a call, ask your personal situation, make an appointment. The one thing about Vince and Lisa that I will hit home on constantly is they're 2 of the nicest people you will work with. So they care and they're nice. And at the end of the day, you can't ask for more than that in order to obtain information. So feel comfortable calling them and asking them any other questions that you may have. Okay. Are we all ready to wrap it up for tonight? Any last thoughts?
No, thanks, Rick, for being the voice.
Well, hopefully we'll send you your link before the next class. Hopefully you enjoyed it enough to come back and join us again next Wednesday for your 30-minute Real Estate 101 class with us. All right. Thank you.
Thank you.